Before you hit lodge this year, there is one section of your tax return most people scroll straight past. It is the tax offset section. And getting it right can put hundreds of dollars back in your pocket and thousands into your super over time. Today, I am walking you through exactly how to check 3 offsets that are quietly missed every single year. Let us get into it. Here is why this matters. An Australian earning $35,000 who gets the low income super tax offset paid into their super but fails to claim or maximise the companion offsets in their return can miss out on around $11,500 in extra after-tax cash over 10 years based on current ATO settings. That is real money lost simply because people assume the ATO fixes everything automatically. It mostly does not. If your income, spouse details or contributions are not entered correctly, these offsets get under-applied and you quietly overpay tax year after year. The good news is that checking them takes about 15 minutes in MyGov, and I will show you exactly where to look. Step 1. Log into MyGov, link the ATO service if you have not already, and open your current individual tax return in MyTax. Head to the tax offset section, sometimes called the T items. The low income tax offset, or LITO, is meant to be calculated automatically for you. For the 2024 to 25 year, the maximum LITO is $700 when your taxable income is $37,500 or less, according to the ATO. It then phases out and disappears once your taxable income reaches $66,667. The catch is this: LITO is only calculated correctly if your taxable income is reported correctly. If you have multiple jobs, a missing PAYG summary, or forgotten deductions, your taxable income can be wrong, and so is your offset. Step 2 is for older Australians. The seniors and pensioners tax offset, or SAPTO, can cut your tax significantly. With offset rates up to 24.288% of tax payable for eligible singles, according to the ATO. From the 1st of July 2025, entitlement cuts out once adjusted taxable income exceeds $158,000 for singles or $316,000 for couples. The problem is, SAPTO depends on you correctly entering your age, your pension status, and your spouse details in MyTax. Miss a box, and a senior can pay over $1,000 more in tax in a single year. So if you're eligible, double check those fields are filled in and the offset is actually being applied against your tax. Step 3 covers the offset most people never even see because it is not cash in hand. The low income super tax offset, or LISTO, refunds the 15% contributions tax on your super for people earning $37,000 or less, paying up to $500 a year straight into your super fund according to the ATO. To check it, go to MyGov, then ATO, then super, and confirm your income for the year is at or under $37,000. Then log into your main super fund and look through your transaction history for an entry labelled LISTO, or low income super tax offset, up to $500. If you have several small super accounts, use the Consolidate Super function in MyGov to roll them into one low-fee fund, so future LISTO payments are not quietly eaten by duplicate fees. And do not underestimate how much that $500 a year adds up. A 30-year-old earning $35,000 who receives the maximum $500 LISTO every year through to age 65, invested at 4% real growth, could build around $39,000 in today's dollars by retirement based on the ATO LISTO cap. But if they keep switching jobs and abandoning small super accounts, much of that can be lost to fees and forgotten balances. Consolidating your super is one of the simplest ways to protect it. Step 4 is the offset most couples completely miss. If you contribute to your spouse's super and their income is $37,000 or less, you can receive a tax offset of up to $540 according to the ATO. The offset equals 18% of the lesser of $3,000 or your total spouse contributions. So the maximum $540 is achieved when you contribute $3,000 and their income is at or under $37,000. It phases out completely once their income hits $40,000. In MyTax, Open the spouse details and tax offset section, enter their income and super details, and make sure they have not exceeded their non-concessional cap. Then record your contribution so My Tax calculates the offset. Picture a couple where one partner earns $90,000 and the other $30,000. If the higher earner contributes $3,000 a year to the low-income spouse's super, they can claim $540 in offset each year, according to the ATO. Over 20 years, that is $10,800 in reduced tax, plus $60,000 of contributions compounding inside the spouse's super. At 4% real growth, those contributions could grow to roughly $132,000 in today's dollars. That is a retirement boost most couples never build simply because they did not know this offset existed. Before we recap, let us cover the common mistakes. The biggest one is assuming the ATO gives you the maximum automatically. It can only apply LITO, LISTO, and SEPTO correctly if your income and spouse details are accurate, and the spouse contribution offset must be actively claimed. Mistake 2 is leaving spouse details blank, which means SEPTO, and the spouse offset never trigger. Mistake 3 is misreporting income. A worker who should report $35,000 but enters $40,000 loses a big chunk of their LITO because the phase-out starts above $37,500, leaving them hundreds of dollars worse off, according to the ATO. And mistake 4 is opting out of super or leaving balances scattered across high-fee funds, which throws away your LISTO every year. Just to lock in the headline number. The maximum low-income tax offset is $700 for taxable incomes of $37,500 or less in the 2024 to 25 year, according to the ATO, phasing out to zero at $66,667. It is non-refundable, meaning it can reduce your tax to zero, but will not create a refund on its own. Still, that is 700 reasons to check the section before you lodge. So here is your rapid recap before you lodge. 1. Open My Tax and check your LITO is applied against your correct taxable income. 2. If you are 65 or over, confirm your SEPTO details are entered. 3. Log into your super fund and verify your LISTO payment is landing, then consolidate any small accounts. And 4. Run the spouse super contribution offset in the spouse details section. 4 checks, about 15 minutes, and potentially thousands of dollars over time. If this helped you spot an offset you were about to miss, do Future You a favour and run these 4 checks before you lodge. Subscribe for more plain English breakdowns of Australian tax and super, and next up I will show you the deductions most people forget to claim before the end of the financial year. Remember, this is general information only and not financial advice, so check your own situation or speak to a registered tax agent. See you in the next one.